As an investor or a trader, it's very important to manage your risk. One of the best ways to do that is with CTKS method paths and structure. You can gain X-ray vision inside the markets and see where price is coming up to and where it's likely to get repelled from. It's a very, very powerful methodology. Let's run the numbers. Part of our risk management is to have a strategy. If prices come down, they go flat or they go up. This is very important, especially inside the crypto market. Always remember, you control the trade or investment, but the market controls the return. You must have three simultaneous strategies: a down strategy, a neutral strategy, and an up strategy at all times. And this is inside any market: Forex, commodities, stocks, crypto, doesn't matter. One of the most effective ways to do risk management is to create CTKS method paths: an up case, a down case, and a neutral case. Each month I create a video that goes through the up case, the down case, as well as a trading view indicator on the tier 1 charts as well as the tier 2 charts and the tier 3 charts. We have already seen Litecoin, BNB and XRP hit their upper boundary price targets. If you know where the structural levels are, you're going to do really well. In looking at the positive price path with Solana's behavior, we can see that even though these price paths were released all the way back at the start of the month, the positive normalized price path has been holding Solana's price incredibly well. Now, what's happening up here? Oh, this is pretty interesting. That's something I definitely want to show you. And also, you'll notice how the normalized positive price path has contained Solana's ascent. The key thing to understand, it's not going negative and it's not consolidating, at least at the current time. These CTKS method paths are drawn up for the positive normalized price scenario, a consolidation scenario, and a negative scenario. This is how you can literally look on your chart to determine where the price is going. These paths are contained within the video. They don't come with the indicator as yet, but I'm working on it. I've zoomed in on Solana's price structure, and the key is to understand structural levels are created through all of structure and according to level 1 and level 2 standard certification. I've also left that CTKS method path up for you so that you can understand why things could be just about to hot up for Solana. Of course, it depends on what Bitcoin does, and you need to keep this in mind as well. If Bitcoin is going down, there's nothing to stop Solana from being dragged down with Bitcoin. This is the way the crypto market works. If Bitcoin is coming down, you have a 98% probability that Solana is going down with it. That's why we look at normalized price paths. Now, let's pop on structure and see what's underneath the hood. Structural levels are always created by a standards-based process across all of price history. What we can see around that 150 mark, there's a structural resistance level. Notice how price reacts and interreacts between structural levels. If it can't get above, what's it going to do? It's going to go below. You can see an underside retest in there. And this structure, by the way, is on the 30-minute chart. It just goes to show you how granular you can get with your analysis. The normalized positive price path expected that Solana would take time to digest these big moves up, because when you get into structure, it actually pushes price down. What does this structure mean? It means the sellers are there trying to push the price downwards. What does this structure mean? The buyers are there trying to push the price upwards. You always get a kind of battle between the sellers and the buyers, and you can basically see who's winning at any specific time. If price gets above and manages to retest and then continue on, well, the buyers are in control and the sellers watch out. And what you can see literally up to that 162 is a positive fresh air gap. In order to get through this gap, we have to get above 154 to move to the 162 level. We're not quite there yet, but price is always moving in a wave-based function. So far, we've seen a challenging of this 150 level. Can Solana get above and go bullish, or do you think it will come down and get bearish? There are some structural support levels inside the market, and this is good. Please let me know in the comments what's your anticipated move on Solana in the next 24 hours. For example, when we look at the S&P 500, is this following a positive price path, a negative price path, or a neutral price path? The answer will dictate what you should be doing during the month. At the current time, the S&P 500 is not following the normalized positive price path. It's not following the normalized negative price path, but it is following the normalized consolidation path. I do these price paths through the video for all the Tier 1, Tier 2, and Tier 3 charts, right out to the end of the month. Looking at the DXY, we can see that the DXY was following the normalized negative price path, but then it became so much weaker. This caused an enormous increase in the crypto market. And another result was gold and silver just rallying. Now we can see that the DXY is coming back to the normalized price path. This is to be expected. When looking at NVDA, the normalized price paths for the positive side, the neutral side, and the downside for NVDA were released right back here on around the 4th US time. And what we can see is this normalized price path has predicted price relatively well. For example, when price was up here around 875, very few people would have thought the price would come down to 834, but there's levels of structure that create these price paths. Of course, when NVIDIA shot up to 973, the thought of it coming down to 854 was off pretty much everybody's cards, but we understand how normalized price paths work. We see this inside crypto all the time. We have massive explosions in price and then they come back to the normalized price path. Drawing up CTKSMethod price paths is part of level 2 standard certification. It's lesson 22. As you can see, it's incredibly powerful. Returning to NVIDIA. Those price paths are drawn from what is called CTKS structure. But what the heck is CTKS structure? It's the world's most powerful smart money buy and sell level detection system. Fundamentally, it tells you where the strongest support is and the strongest resistance levels are. It's the world's only leading indicator of price. Okay, let's turn on the indicator and see where those structural levels are on NVIDIA. The first thing to understand with NVIDIA and structural level analysis is always the same. If it's coming above, it's going to the next structural level, which was around that 965 mark. You can see NVIDIA exploded through what is called a CTKS gap. This is a positive fresh air gap. And the problem is, if it can't get above, it's coming straight back into safety nets, because when you get negative momentum, you've got a cascade of short liquidations causing more short liquidations and more and more and more until structure finally slows it down. That's why we talk about structural levels as being like safety nets. A safety net is not a brick wall. If you've been to the circus and you've seen the trapeze artists, they get caught by the safety net and rebounded. Like this, they get caught and rebounded all the time. We can see NVIDIA is getting over that 909 level and getting back into that positive fresh air gap. This is very good for NVIDIA. This puts the 965 level on the table. The other good thing is that we've got a lot of structural support below, so the probability of a sell-off is reduced with NVIDIA, because you know where the safety nets are. I'll explain that just a little bit more. Around that 965 mark, you saw that NVDA couldn't get through this level of structural resistance. It couldn't consolidate and push higher. That meant it was coming down, but it was coming down through a negative fresh air gap. That meant a lot of shorts would be liquidated, and that would also mean that it was likely to pass through multiple safety nets or multiple levels of structural support before it got rebounded. Strong structural support is your lifeline, it's your safety net, because when you understand where the structure exists, it's gravitational by nature. Just because it comes down doesn't mean it can't go back up. In fact, that's what we anticipate. Typically, most people get caught into the market or drawn into the market when price is going parabolic. Parabolic price is typically the result of a positive fresh air gap, but parabolic decays in price just come when sharp angles reflect, and boy do they reflect. You must know where the structural levels are, or the markets will mercilessly take your money. When you learn the CTKS method, you can apply it to any price chart. We were on NVIDIA before. Let's apply the same logic to Bitcoin. Now, what do we notice around this specific level, that 71,785 mark? That is a structural resistance level. You'll notice how the price gets weaker and weaker and weaker until it breaks underneath. It's trying to retest it at the current time. But the one thing that we note, it didn't get to the next structural level at the 73,388 mark. This is important to understand. If a structural level which is higher, that means it's a resistance structural level. And if the structural level is lower than price, that means it's a support level. Now, what do we notice here with Bitcoin? Bitcoin had a sell down and then a recovery. But where is the real structure inside the market? It's at that $67,000 mark and just a little bit below at 66,838. Now, what does this mean for Bitcoin's price and, of course, the entirety of the crypto space? If Bitcoin can't get above this 71,900 mark, it won't be able to challenge the higher level of structural resistance. That puts into case a bearish scenario where we decay back to the $67,000 mark. Inside financial markets, people are either bullish or bearish. I like to think that the better way to be is just structurally biased, because if you've got a structural bias, you're just looking at the structure that's inside the market and saying, okay, it's coming up, it can't get up to the one above, it's consolidating and it's weakening. This is already putting these levels in play. What about it? It's trying to get up there. No, it was absolutely smashed. What is a result of this level of long liquidation? There were just too many longs inside the market. The markets are always institutional stop hunters. That's what they do. They're always just if there are too many longs, they take them out of the market. If there are too many shorts, they take them out of the market. And there were too many shorts in the market, so they got liquidated. But this level of structural resistance brought all the longs back into the market. And as the longs got heavier and heavier inside market structure, of course, the institutions hunted them down. Therefore, when you get too biased to one side, either to the long side or either to the short side, the institutions say, thank you very much, you're next in line to get liquidated. This is why you need to be very careful if you're using any form of leverage in the market. You must be very expert at spot first. This is also why we must pay a great deal of attention to where the structural levels are, because institutions will play with retail around structural levels and just drive everything between structural levels. So just keep this one in mind. If you would like the trading view indicators that you've seen inside the video, just pop across to CTKSMethod.org and you can pick them up there. Inside the video, I go through the CTKS method paths on all of the Tier 1, Tier 2 and Tier 3 charts. Having your three-dimensional risk management and your CTKS method paths playing out at all times is just like money in the bank. You will be prepared if the price goes down, it goes neutral, or it goes up. Because remember, price is always moving in a wave-based function. It's always going up and down. This is the way the price moves. Your focus is to look at the CTKS levels and just raise your synchronization factor. The more charts that you look at and the more interdependent the relationships between the charts, you will understand if a probability exists for your specific charts to go down, neutral, or up. And well done to everybody doing the cheat sheet. You would have seen the US 2-year, the US 10-year start to rise up, as well as the DXY. And dollar yen was also increasing. That led us to assume that the probability of a synchronization of Bitcoin coming down was on the cards. And that is what's transpired. Have a great day or night ahead, my friends. And Kate and I look forward to catching up with you again in the next video. Bye for now.